Nuvve is the global leader in vehicle-to-grid or V2G technology. This electric vehicle charging company is in the process of merging with a SPAC called Newborn Acquisition Corp, ticker NBAC. The business combination is expected to be completed in the first quarter of 2021. In this video, I'm first going to give a high-level overview of Nuvve Corporation. Second, I'm going to go over my bull case for the stock. Third, I'm going to go over my bear case. Then I'm going to go over whether or not I plan to invest. And be sure to stay to the end of the video because I'm also going to talk about the differences between the common stock, the stock warrants, and the stock rights, and how the warrants and rights structure make this SPAC a lot different than other SPACs you may have encountered. All this right after. I am not a financial advisor. This video is for entertainment purposes only. Learn to invest like a wolf at your own risk. What's up everyone? Welcome back to my channel, Wolves of Investing. My name is Donnie Nguyen and I'm the founder of Wolves of Investing. If you're new, my channel is primarily about investing in the stock market. If you want to learn how to achieve financial freedom through investing, be sure to click on that subscribe button and notification bell if you haven't yet. And please be sure to drop a like on this video if you enjoy it, as it truly helps out the channel. So without further ado, let's get right into it. Who is Nuvve? In order to understand Nuvve and what they do, let's look at page 5 of the investor presentation, which explains it very well. Nuvve's proprietary vehicle-to-grid or V2G technology enables the linking of multiple electric vehicle batteries through EV charging stations into a virtual power plant, providing bidirectional services to the electrical grid in a qualified and secure manner. So imagine you have thousands of electric vehicles sitting around in parking lots, from personal vehicles to fleets to school buses. It's a hot summer day and everyone is using electricity to turn on their air conditioners. Your local electric utility needs to find extra sources of electricity, or it may have power outages. If it's connected to Nuvve's virtual power plant, the vehicle owners, consumers, and businesses can sell electricity to the utility to help them avoid power outages. Vehicle owners will get paid while their cars are just sitting around in a parking lot, and electric utilities can avoid power outages. It's a total win-win situation. This system of selling electricity to the utility has already been around for decades, not from electric vehicles, but from rooftop solar panels. I personally have rooftop solar on my home, and I've been selling electricity to my utility for a little over a year. So I know firsthand how cool this technology is. So you might be wondering, if you sell your electricity from your electric vehicle to the grid, won't that harm your EV's battery life? Actually, it won't. Nuvve's V2G technology will optimally charge and discharge your EV in order to maximize its battery life. And like other charging technologies out there, the customer will have complete control of how and when their electric vehicles get charged and discharged to ensure that they'll have enough charge in their battery when they'll need it. Even though V2G is still at the very early stages, Nuvve has had over 3 years of commercial operation in Denmark of their V2G solution. In its Denmark operations, the average revenue per car was 158 euros per month, which is approximately $193 per month or $2,300 per year. Their solutions are currently being used in all of these different places around the world. Nuvve lists ChargePoint, the Mobility House, NLX, Shell, and OVO Energy as its competitors. As you can see from the row marked bidirectional, ChargePoint The Mobility House, and OVO Energy also offers V2G. Nuvve has a first mover advantage in the V2G space. What's really important to me is that they own key patents, which means that they can license out their technology to other companies as another revenue stream. And it's a barrier to entry for other competitors. Next, let's talk about the SPAC transaction. The deal is expected to close in the first quarter of 2021. After the deal closes, the NBAC ticker symbol is expected to change to NVVE. One share of NBAC is expected to become one share of NVVE. Post-transaction, there's expected to be 20.2 million shares outstanding. Assuming a share price of $10, that gives a market cap of approximately $201.9 million. So this would be considered a micro-cap stock at the $10 per share price. They will have zero debt and $70.3 million. This gives an enterprise value of $131.6 million. After fees and expenses, Nuvve will have $66.3 million on its balance sheet to fund operations. Newborn sponsor will own 8.6%, SPAC investors will own 31.3%, PIPE investors will own 7.1%, and Nuvve existing shareholders will own 53%. Nuvve will be entitled to an earnout of 4 million newly issued shares if its calendar year 2021 revenue exceeds $30 million. With this earnout, Nuvve existing shareholders would own 60.8% of the company. And for you new SPAC investors, I always get this question, so I'll try to answer it here. What happens if the deal doesn't go through? Well, in my experience, over 95% of the deals lately have been going through. But there's always a chance that it doesn't go through. If that happens, then the SPAC will typically look for another target. However, NBAC only gave themselves 12 months to complete a deal. So they only have until February of 2021 to complete a business combination. This means that this business combination is likely to close by February. But according to Newborn Acquisition's prospectus filed with the SEC, they have the option to extend the deadline for up to 6 months total. And if for some reason the deal doesn't go through and they decide not to find another target, then the money in the trust, which is typically $10 per share plus interest, will be returned to shareholders. Just remember, this money is not guaranteed, so you should always manage your own risk appropriately. I typically don't put more than 10% of my investment capital into any individual stock, which helps protect me from unpredictable black swan type events. So what is my bull case and long-term price target for Nuvve? First, Nuvve is the market leader in V2G. Sure, there are a few competitors, and sure, the market is very small right now. But if their first mover advantage, and especially their patents, hold up, they could continue to dominate the industry over the next 10 years. Second, I believe that V2G is the future and will grow exponentially over the next 10 years. I personally don't see how any government agency, electric utility, business, or consumer would not want to use V2G to save money and save the planet. I think this technology is just way too cool, and the demand for it will just blow up. Third, they're partnering with one of my other favorite SPAC EV companies, Lion Electric. I also made a video about Lion Electric, so be sure to check that out if you haven't yet. Now, I am always skeptical about the financial projections in a SPAC investor presentation, but let's just say that the projections are correct and that Nuvve will have a revenue CAGR of 312% from 2020 to 2022. That gives revenues of $93.4 million. Because I really believe strongly in the long-term demand for this technology, and I also believe that their patent protection will hold up, I'm going to estimate 100% revenue growth from 2022 to 2027. That would give revenues of $3 billion by 2027. If that scenario plays out, Nuvve would be a super high growth company with a huge economic moat. So in that scenario, I'd give them a 20x price to sales ratio, which would be approximately $60 billion market cap. Divided by 20.2 million shares would be a share price of approximately $3,000. The current share price is around $20, so that would be a 150 bagger. All right, guys, I know this is just napkin math. We're not doing a discounted cash flow analysis, and my projections are highly optimistic, rough estimates. But this is my personal opinion on where this company could potentially go if the bull case comes to fruition. So what is my bear case? First, they only expect to achieve $5 to $6 million in revenues this year, with an expected loss of approximately $3 million on the bottom line. So they are an incredibly small company in terms of revenues, and they are operating at a net loss. Even with a small market cap of approximately $400 million, given its share price of around $20, this values the company at a current price to sales ratio of over 70, which is extremely high for any stock. Second, even though they have revenues and have demonstrated that their product works at various locations around the world, there's no guarantee that they'll be able to scale from $5 million in revenue per year to their projected 312% CAGR. They will have to deal with all of the different governments and regulations around the world, and that could be a challenge for them to scale. Third, it's not certain how strong their patents are, and that will be a key for them to achieve market dominance. The investor presentation lists competitors that offer V2G. So are those competitors licensing technology from Nuvve? Or do those competitors have their own competing patents? Fifth, I've never heard of any of the SPAC managers. As you guys know, I usually like to invest in SPACs that have proven track records. So in my bear case, it's pretty simple. I think that the company could go bankrupt in the next 5 years if things do not go as planned. Do I plan to invest in Nuvve? So I actually bought a small number of shares of NBAC with the cost basis of $15.73. Although I strongly believe in what Nuvve is trying to achieve, I still think that it is a highly speculative company, which is why I only bought a small number of shares. This is not a swing trade for me. I expect to hold my shares for the next 10 plus years. And since I didn't invest a lot of capital, I'm willing to lose my entire principal on this investment. I will also be adding Nuvve to my EV Pure Play portfolio once it becomes available on M1 Finance. For those of you who are new to my channel, my EV Pure Play portfolio is a highly concentrated portfolio that represents my favorite EV companies that I believe will lead the way to EV adoption. I plan to be invested in this portfolio for the next 10 plus years. I actually seeded it with $1,000 and bumped up my weekly contribution from $20 to $25 since M1 Finance requires a $25 minimum in order to use the auto invest feature. Even though I'm long-term on this stock, I do see this as a huge short-term swing trade opportunity because of what's happened to the stocks of other EV SPAC companies. For example, I made a video about QuantumScape a few weeks ago when it was $37 per share. It's now over $100 per share with the market cap of over $40 billion. QuantumScape is a company that won't have a product on the road for another 4 to 5 years. Similarly, I think that Nuvve has the potential to double in the next few weeks or few months. And as promised, I'm going to talk about the warrants and the stock rights. First, let's talk about the stock warrants. These warrants are structured differently than most other SPACs. Most of you know this, But if the common stock remains under a certain price, usually $18, then the warrants should not expire for another 5 years after the merger is completed. If they stay above $18 after the warrants become exercisable, then the company could redeem them early. And of course, if a deal doesn't go through and the SPAC calls it quits, then the warrants will also expire worthless. I made a video about SPAC warrants for beginners, and you should definitely check that out if you want to learn more about warrants. However, NBAC warrants have two key differences than other SPACs. The first is that each warrant can only be exercised for 1/2 of a share. So you should purchase warrants in multiples of 2 if your plan is to exercise them. Yesterday's closing stock price was already $19.90. If this price holds, then the warrants will probably expire early within a couple of months after the business combination is completed. So that's another risk with holding the warrants. What about the stock rights? Unlike most SPACs, NBAC also has stock rights. The holder of the NBAC stock rights will automatically receive 1/10 of 1 share of stock after the business combination is completed. So that's 1 share of stock for every 10 rights. Just like the warrants, no fractional shares will be issued, so the stock rights should be bought in multiples of 10 if your plan is to hold them until you get the shares. Your broker may also charge you a fee to convert your rights to common stock, so you should also take that into account. So those are a few key differences with this SPAC versus other SPACs. Let me know what you think about Nuvve and what other SPACs you're watching. Drop me a line in the comments. Be sure to leave a like on this video before leaving. Thanks for watching, and I'll see you next time.